Cool. So welcome to this feedback video and video submission pretty much from one of the students inside of the Discord. Pretty much like a student slash partner. He's contributed so much to the community thus far, which is crazy, and we only just started. Like, he's the one that ignited the idea of the indicator based on the influence of my strategy. So he started, this is Anno. Anno started he created the base of the indicator, and all I did was go in there and tweak some stuff and remodeled it for the way how I would want to actually have it presented to you guys. And yeah, for that I'm forever grateful, and we're just continuing on this trajectory of just improvement and delivering as much value as we can to everyone in the community and everyone that we see that are interested in trading itself. So he created this video, and I'm about to literally watch this now and react to it, and not even just react to it, but see exactly what his inclusion is and how he's looking at the system as well, and his contributions. So let's just take a look, and I can just be pausing it, seeing certain stuff, saying my little feedback and stuff like that. And he will also watch this too. So Anno, peace to you, and I appreciate your existence entirely in the community and outside of it, bro. Appreciate your efforts so far and your contributions, man. Looking forward to whatever else we can produce to create more value for everyone else that's watching as well. So let's get right into it.
So, what's up? I'm making this video. I just made the entire video, but I realized afterwards the sound wasn't recording, so I'm doing this one more time again. Now with the sound, I hope, and we'll see if it works this time. So, what I've been doing, I've been testing a lot of TEF's system, and I noticed some things along the way, and also, of course, coming from MentorFX, having watched all his videos, having tested a lot about his system, getting a little bit confused about it still. Still watch his videos as well. It makes sense, but it's...
For those who don't know, MentorFX is who we actually learned from. That was my previous mentor. That's his previous mentor as well. And we both came from that same background and understanding of what trading is and how it works. So now this is this is exactly now where we've reached, where we've developed the system and what we now teach and understand.
His thinking is very complicated, and sometimes my thinking is as well. So that's why TEF system really helps me to move around shop, and I like that. But I'm also kind of used to, or at least that's what in the ICI system of MentorFX works against me is the moves coming back to the entry, chopping around at your entry and then moving. I want to coming from SSCs, or basically the 3-box method as MentorFX teaches it, is this. So you have simply, right, so have some structural moves on the left, you're in a bullish play basically, and you come into a SND.
A zone, so SND zone.
He would say an SND is right here.
That's the 3-box method.
And you would enter right here, and that's your risk, that's your reward. That was his initial system, and that's what I learned at the start. And because I'm used to having such little risk, such high potential, and also it might not do this, but it might also, which
play around and chop
all the time, and then go. I am protected right here. I am at break even, right at some point in time where it shows me bullishness. So I have a rule now for that, and I will explain it. So I will be at break even, and if this happens, it will not do anything for me, right? So I will be at break even. If it comes to break even, fine. There will be plenty of opportunities, as you will see, further down the line, and I'm just happy with the break even. And that's what I missed in the system, and that's what I also missing the ICI system of MetaFax. He loses and break evens a lot and wins not that much, and
As
that will
often.
consider my psyche. That will hurt my psyche a little bit.
Yeah.
If that makes sense.
It definitely does, because if you don't win a lot in nature, right? Everyone wants to win. So if you don't get a chance to win a lot, if your win ratio is very low, but of course we're talking about money, so your win ratio in trading can be very low, but your returns are super high. You have to have a like a solid foundation of a mentality and a mental capacitance to operate that way and maintain that way. Like you can't have short-sighted vision at all. You have to have that long play in your mind to sustain through that kind of thing. You know what I mean? So having a different system like the one that I have now creates a lot more opportunities, more accurate opportunities for you to be in and a part of, that you don't end up in choppy areas like this as much because of my system. Like, even though yes, you're getting opportunities in here, you more than likely wouldn't even be in here because of the higher time frame confluences and stuff like that. So yeah, there's a lot that goes into the system that makes it a whole lot more easier on the psyche to go through and tolerate and bear.
So first of all, just like Dev's system, I start at the 2 hour. Very simple. I want to, if the indicator works, yeah. So I want to look for, a kind of a bullish high.
Right. So he's using the indicator there as well.
Or if it's invalidated, I want to, because the daily is still bullish, and we just seen in Tev's recent video, Market Mechanics number 3.
Nice.
That he also uses the weekly and the 3 month, and if you have access to a lot of markets, you can use that to scan the markets. I right now have only access to the futures markets, and that's only these which are kind of liquid, which I can trade. So for me, I would not go to the 3 months and the weekly right now, but I'm considering going to Forex as well, and then I will consider that, of course, because then you can just get into any market you want. There are plenty markets, and there's always a market that is in the best context.
Yes.
For now, I'm using this, and my brain works so that that was even TEF system took away a lot of confusion already, but I have to be in an if this then that mentality. And one thing that confused me on the 2 hour, he sometimes had a what do you call it, an invalidation, and then not a new swing high. So imagine this is not a new swing high, he would still trade this. And I was like, I don't understand that, because it's invalidated, didn't make a new swing high, so that doesn't meet the rules in my brain. So I went into some investigation on that, and as you can see,
nice. So I think what he's saying is that when he first came across my videos and he saw that this wasn't a swing high, what he was considering at the time not to be a swing high, and then I would take the trade through that, and then he saw that it probably worked out, he was like, wait, what is this? So he started to do the investigation on it, which now he realizes, oh, this is the true mechanics of it. You know what I mean? So it's cool to see that he logged on to that, which is exactly the reason why I do this anyways, so that you can actually understand it and see it for yourself, you know? Because when I discovered it using my MAs, I haven't seen anyone ever use the MAs. And the reason why nobody can replicate the indicator right now is because you don't necessarily know the indicators or how we use the indicators to calculate these points right here to tell you when you're bullish or not. So we are literally able to get into the bullish moves at the very first instance of it. You understand? And that's the first real good contextual instance of it. And that's what That's where our advantage is. Because if this is on the 2 hour and this triangle popped up right after this candle here, which it did, and you started to look for trades in here on the 15 minute and on the 1 minute, this here is exponential, like growth. Like your RR, your risk to reward right here is probably like a 1 to 20, 1 to 30, 1 to 40, depending on how you wanted to get in there. Because our management system as well would have kept us in this the whole time too. But yeah, let's make him continue.
Basically, on the daily, if we have an invalidation, I look at the daily, and the daily is still bullish. So, and that's also, I think, how Tev thinks.
Yes.
He waits because the daily is still bullish, he waits on the 2 hour to close above the MAs, and he knows the bullish has the overall narrative. And if it closes above the MAs, it is likely to still
To
go for these
continue.
highs and these highs
Yep.
and whatever, right?
Yep. As it has done in
So
the
that's
past
basically
over and
how
over.
I approach it too. There's more to it, but
Nice.
I only have the availability of 30 minutes on this recording software. Use the free software, so I will not go into detail on that.
Okay.
But I have simple and clear rules, which I use in my. I have made a flow chart. It's not done yet, so I'm still working on this.
This is very nice.
Yeah, this is basically an if. This forces me to think in an if this then that mentality. So I take my whole
Beautiful.
step by step process for.
As you can see, start. This is where you're just at. Go to any asset you can trade, which is any available asset you can trade. And for me, it's Forex, commodities, whatever. Does the 2 hour have a swing high low, which means he's looking on 2 hour as his highest context? If it's no, then set an alert and just go back to any other asset you can trade. And if you keep rinsing this and repeat and you have no assets to trade, you never do anything. You just pause. That's not a scary thing. That's a very good thing because you're saving money. If yes, then this is now his new what you want to call it, your new conditions to follow. Is daily same context? Because now I showed him where part I have 4. It's not even 3 anymore. It's like daily is my godhead, then 2 hour is my highest context that I want to use to trade, then 15-minute is what I want to see as my how Mentafx has it. He has his EVC, which is his execution, validation, context. So I pretty much have that same system there, because there's a lot that I adopted from Mentafx because that's the only thing that made sense out of all of what I see in the entirety of the markets and people teaching it and everything. Mentafx, it has the thing on lock. You know what I mean? Big up to him. That's who I first learned all of these things from. And what I did was literally just modify the system to simplify it a whole lot more and added my twist to it, which were the things that I literally learned over time, 8 years. So that's what birthed this system here. So I'm going to be getting on a call very soon with Mentafx as well and have this conversation with him as well, showing him the system, showing him everything that I've done thus far to improve what he has done over the past 10 years maybe, or even more. And hopefully he finds value in that as well. And you just never know. It doesn't really matter anyways, but let's continue with this now. So is daily same context? No. Cool. Either wait for the trade or wait, so let's see, 2 hour closed above top MA. So this is exactly what he just explained as his system, which is the same system that I have. Or trade. So he trades, then he goes into the 15-minute is valid and below 2 hour target. Does that make sense? Yes, because now you want to aim for the highs and surpass that, which gives you the space to get high RR trades. Or no, 15-minute made swing high. So these are the questions that he's asking himself now. Does it make sense to do that or not? If it's yes, and below that, yes, 1 minute makes a swing high. And then once you do that and wait for that to become that swing low, you can trade through that high. And the likelihood is that it'll continue in that direction. And that's very simple. I know I might have said it just now and you might get a little confused, but it's not confusing at all once you get to see the system.
For analyzing a market and trying to put it into a flowchart where you have constantly questions to yourself. So if I have a swing high, what am I doing then? If I have a swing low, what am I doing then? Right. So I start at the two hour. So basically, we can go through it pretty quickly. We go to any asset you can trade. In this instance, gold. Do we have a 2 hour swing high or swing low? So here you would have a swing low, here you would have a swing high. So Obviously, almost always it is yes. So only in this case, if you were to be here, so if I were
Mm-hmm.
to take this away, so basically you would not see this, then there would not be a swing high, swing low because it's invalidated and there's no thing to look at
Absolutely.
that moment. So you wait for a swing low or swing high to be confirmed, which is also here. Set alert for 2 hour swing high, swing low, or go to
Mm-hmm.
any other asset. If there is, I check is the daily in the same context. If no, then there's discretion. We can either wait or trade, and then now it's clear in my head. I can wait for the 2 hour to close above top MA, or I can trade
Mm-hmm.
the lower part. So I can trade to the lower. So here, for instance, bearish trades would have worked. Here, they wouldn't,
Right.
of course.
Right.
Here, I wait
Right.
for the 2 hour to close above the MAs. So if I use my discretion to wait, I just wait because I have checked my daily. Like in my
And your
flow
daily
chart,
is
it's the daily in
bullish.
the same context. If I have a swing low, it is not. If I have a swing high, it is. Right? So, and if it is not, I can wait for the 2 hour to close above the top MAs, and then I can go on with my trading strategy. So, now onto my trading strategy. I then look, like it says here, 15 minute is valid and below 2 hour target. So we have a 2 hour target, which is this
At the
one,
top
and
there.
we have one
Yep.
here.
Mm-hmm.
So the 15 minute is below and it is valid. So
Nice.
one other thing I tested, and which looks pretty good, is I just follow the lowest point after the swing. So we have this one, but we also have inside low points, because
Mm-hmm.
on big ones like this, I also look at the inside points, but we well we
Yes.
provide we prevent a lot of losses like this. So I
Mm-hmm.
only trade if it makes a swing high above these points on the 1 minute. So we have the lowest point,
Very nice.
and if we just draw a line above the high of that lowest point, and we only trade if it comes above. So as you can see here, it
Beautiful.
comes above very briefly, then it moves down. Comes above very briefly, then it moves down. So you prevent some losses taken
Mm-hmm.
in this chop if you would have traded this. So here again, we make a new low, right? This is a new low. We draw in the high, and we will take trades.
What he's literally doing right here is fractally going down into the time frames, because remember all time frames are the same. So he went down into the fractals of it. Remember, he zoomed in right now and he's on the 15 minute and he's zoomed in. This right here up the top is the 2 hour line. So he's zoomed in. But what he's even doing right here, which is very cool to see, because I just showed him the other day with the 1 minute trades how you can treat every single candle. You can treat every candlestick as another play of a lot of different price action going on inside of it. So he's already utilizing that lesson right there, because see, he's using this as the high right here, because this right here is on the 1 minute a high right here, because if you go down to the 1 minute time frame, every candlestick is a 15-minute representation of 15 minutes intervals, right? So this is 15, 30, 45 candles literally just going on in the 1 minute. This is a lot of candles right here. So he's looking on this as a cleaner look to the 1 minute chart, literally just looking at it from right here. So that's what he's doing right here when he's talking about using it so intricately down in here, right? So don't get scared and thinking like, oh, even though it's simplified, I have to go in here and do all of this too. No, this is when you know what you're doing, and now you have a deeper understanding of how you can look at it. This is not saying, oh, you have to be able to do this in order to be successful. No, because literally right here, guess what? Price came and closed above here. This was your triangle. You could have taken this trade right here. You could have taken this trade right here. Wherever the triangle is, you can take that trade to push upward. That's one with a stop loss below there, which might have gotten topped. Then this one right here under there, which this one would have definitely gotten topped. So those would have been 2 losses or 3. And then this one right here that pushed up, that you definitely wouldn't have been topped, right? But this one invalidated, so you probably wouldn't even be in here until further up when it validates. So that's just how you want to use it discretionally. But here's where it gets really intricate, because if you go down to the 1 minute, there are many triangles in here that you can take, which you might not be breaking even, you might actually make a lot of profit just pushing up to this, because this right in here might be a 1 to 6, 1 to 7. You never know, so that's a
Comes
good way
above,
to
and
see it.
then it's going into the trend.
Yeah.
So very simple. If we go to the 1 minute, then
Wow.
this
So
is going to be
let's
my
see.
strategy.
Told you just now. Yes.
So what I noticed and what I said, like TEF system is a very powerful system, and it's very nice, and it's similar to the ICI system of Mentafx, where he just buys through a high.
Yes.
And
Or
what I
sells
said,
through
for
a low.
me, it's kind of well, a little bit problematic, because I'm used to having just
That.
small risk and little potential of getting back to my entry. So I want to be able
Nice.
to break even quickly. That's basically what I want to have. So I analyzed, the TEF's trades, and what I noticed, and my own as well when I was testing this, what I noticed is that if you trade through the highs, it often comes back, right? So we could see that, for instance, here. Sorry. So we can trade through these highs, So, right, we trade through the high, good stop on the low, and this would be a win based on TEF system, right? But as you can see, you get tapped in, you get back into drawdown,
Your deep
you
zone.
go higher, you get back into drawdown, then you move, and that's
Right.
what I don't want. So what
Right.
I
Cool.
did
And
and
this
tested.
is now where we can refine the systems to have minimal drawdowns, because I've noticed that in my own system as well. He's talking about my system right here. So I'll get into a trade and I'll know, me mentally, I'll know that, hey, it'll go down into drawdown maybe, but the tendency is that it'll continue in that trend. So I don't even worry about it. And versus where some people would prefer to just have a trade that they get into and it runs off. And in my system, you definitely do have those that literally take off right away, as you will see in a video that is coming up probably after this, where I just got into gold yesterday, and that in 1 minute took clean off and went straight to my 1 to 2 in 1 minute. And that's something that can happen, but like he's saying, the tendency a lot of times is that it will come back, but coming back is not a problem. Is what you want to refine your system to do, because you can even work around something that says, if you see it always coming back, then you can wait for it to come back first and then find another entry in there. And this is how we develop the system and get deeper and deeper. So I think that's exactly what he's about to do. So this might be mind blowing in terms of like what we discover from what he is discovering right now in the system. So let's see.
Is simply, we have a swing high, a swing low. So so anywhere above this blue line, I am just drawing in the swing highs and swing lows. So I want to have the swing high above the blue line and the swing low above the blue line. So here we have a swing high, swing low is under the blue line. I don't bother.
Cool.
Here we have a swing high. If we follow it, so I would look for a swing high. The indicator just indicates that, and I would follow it on the left to the downside. Is this a swing high? No. Is this a swing high? No. Is this a swing high? Yes. Okay. So that's my lowest point. I draw in my Fibonacci, which is just a simple Fibonacci tool, which is available right here. I have set it at 75% and 50%.
Okay.
And basically, I want to have price coming to the 75% of this Fibonacci tool
before,
and then come into this area, which is my entry area. I would set an entry here, put my stop below the low with a couple of pips below it, because it sometimes can just grab the liquidity below the low and then go. And that's my trade. And I can do that for every one of these swing highs. I will show you. So we have a swing high, we follow it on the left side to the low. We have a swing low. This is the candle that makes this swing low, so we wait for this close, so we won't trade anything here. We wait for it to come back into the 75%. Comes into the 75%, comes into our entry zone. Stop below the low.
Below the low. Very nice.
As you can see here, it absorbs a little bit. And what I do is I break even the moment it closes above the 50%. So maybe there or there, whatever it is, this would be a break even.
You'd end up with a lot of break evens, but
partial at 1 to 2, whatever. That depends on your management rules. But this would be a break even for me. Then we have a new swing high, new swing low. We don't come into the 75% before we liquidate the swing high. And excuse me, I need to I would dry mouth from all the talking, because I did a video before this as well.
Hey, but this is a very powerful video thus far. Very powerful. So what he's including in the system already thus far is Fibonacci. And he's using, like he said, the 50% and the 75%, since he sees the tendency that it will pull back. So now he is now adding a layer onto his confirmations. Again, this is all subjective. If you want to do it, you can do it. If you don't want to, you don't have to. But this is how he's analyzing it. And that's what the whole point of the community is for us to literally analyze us from a very profitable approach, analyze and tweak and keep on getting better and keep on getting better. Because what that will do in the next 6 months will keep us at a point where we might even get in at 2 pips and then and leave it to run, and we might be getting 1 to 50s within minutes, hours. You know what I mean? So it's good that you can have your own system be challenged and you sit down, be humble and watch. Why? Because yes, I created something and I made something new, but that does not mean it stops there. Because it's just like when I learned from MentaFX. I learned from MentaFX, got his system, and then modified it to what mine is right now. And then Anno, is looking at my system right now, which is a modified system, which more than likely is a modified system from somebody else that MentaFX got, which is the Wyckoff, because he got his from Wyckoff, right? It's Wyckoff based strategy. And Wyckoff is literally about consolidation and then continuation, accumulation, distribution, right? Which is all what this is, supply and demand. Yeah, that's all it is, you know. And it's just about perspective and how we're looking at it. So it's good to see what's going on right here. And this is very powerful as well.
So excuse me for that. So we have what is also an invalidation is if this is traded through. So if the liquidity high is grabbed, I'm just waiting for a new swing high. So we get this new swing high. This one doesn't get to the 75%. Have the new swing high. We follow it to the left. So is this a swing low? Nope. Is this a swing low? Nope. Is this a swing low? Yes, it's still the same swing low. So I can use this.
Nice. Okay.
Goes into my 75%. Goes into my entry zone. I will enter it somewhere around there. Could be, but this gives you, looks like it, enough time to enter as low as possible. So
very nice. Especially
that was also something I did a lot of testing before with other systems, with this, with the 75% and all that, trying to buy stop it, but sometimes it just wicks, taps it, and then goes. So to make it easier on yourself and not get very caught in all the nitty gritty and having to be quick to buy stop this, because the reason I buy stop it is because sometimes we have trades that just go like this, and if I would limit order this, I would be in a loss, and that happens quite often. So I was like, how can I prevent these losses? I would still probably be profitable if I would do the limit orders, but still I wanted to prevent those losses just because I don't like losses. So
none of us.
So I was like, how can I prevent that? And I thought, well, with a buy stop of the 75%,
above it.
Yeah, but that's sometimes if it just taps it and goes, it's hard, right? So I made this entry zone just between the 50 and 75%. I always take the half of the entry zone as my risk, so I would have a stop of like 45 as my risk calculation. So yeah, sometimes I enter here. Then if I lose, I will lose less. Sometimes enter a bit higher up. If I lose, I will lose a little bit more than my accepted risk. And sometimes
Okay.
I will have the exact risk amount. So in the end, it will even out, right? And I will have the risk I
That is
want to have.
so funny because I'm gonna show you guys an old video that I made, where I did something with the Fibonacci, and I called it the T block, which is so cool. I have to show you guys this, which is basically what he has here, but it was based on. I'll show you guys, but it's literally almost the same concept, where I have where from the swing low to the swing high, there's a 50%, and then there's a 50% of the 50%, and then that's what my entry was. It was either tapping on the 50 and I enter, or tap on the 50 of the 50 and then I enter there. And that was a very good system. And I literally have a video on YouTube with that. If I, matter of fact, it's at 1648 right now. Boom. YouTube. We're going to hop to that right now real quick and then show you guys, because that there is actually insane that he's doing that right now. So let's see. Let me just get to my videos real quick. And this video right here is literally hidden as well. It's not even something that's out right now. YouTube Studio. Let's just see if we can get into the video real quick and show you exactly what I'm talking about right now. Content. And this is a very old video as well. So here we go. Order flow versus candlestick structure, smart money manipulation. Is it this one? Is this an older one? June 13th. So June 6th. Yes, possibly. So view on YouTube. Let's just see if this is the one. Because I literally had. Alright, let's see. I think this is like when everything was black and green for me. Smaller structure in that structure. Talking on the same stuff, but let me see. Oh, here's the T block. Yep. But let's see. Yep, there you go. There you go.
I prefer to take that.
So as you can see, that, and I'm treating every candle as that because I understood what it was. So this, there's the 50%, and then there's the 50% of the 50%. So it's pretty much that same thing. And I used to wait on price to come back into that zone for me to actually trade it. And this one here was a very massive trade, if I remember how I was looking at this. Let me see. But yeah, you can see where price came back down into these different zones. But this is when I was using like S&D zones and all them kind of stuff. And look at it right here. Like the same thing, and it came down to the 50 and almost tapped the 50 of the 50. And I would literally enter only 2 trades. If it entered on the 50 and then moved away, or if it tapped the 50 of the 50 and then moved away. So my stop losses were close. When I say close, I mean close. I don't think I even took it on this one here, but either way, the same concept as this of what he's talking about.
Makes it a lot easier for me to get into good trades. So this would be a 1 to 5. I take full TP at 1 to 5 right now, and that's it. So I only need I need 2 RR per day. That's what I need. So that's my daily target. So if my first trade would be a win, I would be at 5 RR. That's
more
beautiful,
than enough.
right? Awesome. But 2 RR is the minimum, and I think it's doable to have 2 RR per day. So if I have 3 losses and 1 win, I would still be at 2 RR. If I have 5 losses, I would still go to 2 wins basically to get 2 RR or more on a day,
which is awesome.
So that's basically how I do it. So, and I tested this a lot. Well, we have this one. Then I can just go through this. So this taps it. So you would have a trade here.
Beautiful. Nice.
You would probably have a trade here as well. Which would maybe you count
that
this as a
or break even for him.
As a close above the 50%, then you would break even, or you would have a loss. So this is where you would be wrong once at the top of a trend. and it's better to be wrong once at the top of a trend than to be selling into this trend and be
going,
right
yes,
once, right?
which the whole system
So I'm
prevents you
happy to
from.
take that loss. And then we could take these two, but I would
Does the
probably not
15
because
minute.
well, I'm still figuring this out, but it's invalidated here, so I would
Yeah.
wait for it to close, or at least come above the 200 MA. So maybe in this candle there would be some opportunities, but I want to have it at least after invalidation be above the 200 MAs again.
Yes.
So I would not trade anything here, but just to show you the system, there would be very nice opportunities in here as well.
Oh yeah,
So this would
absolutely.
not come to the 75%. I haven't drawn out here as well. This would not come to the 75%. This one to that low comes to the 75%, gets you in. Look at
Nice.
this. Stop on the low with a couple pips. Right? This was one of these examples where I showed you this would chop around at your entry price, and I would get nervous as fuck, and
Nice.
then it would go. Now it still chops around my entry price, but if it takes me out at break even, right, I would be at break even at this point. Right at this candle, I would be break even.
Nice.
And then
Which is very
it
quick.
chops around. I'm okay with that. And then it goes, and then I would be at my 5 hour for the day. I would be happy. And well,
And look at what
if
it
I applied
does.
some management rules, I will in the future. But for now, I have to apply to a consistency rule at my prop firm, which doesn't allow me to get big runners, at least for the evaluation period. After that, it will. So then I will get into managing, and then the potential on these trades is incredible, right? So
wow, yeah,
this is just insane.
Which is expected, yes.
So that's pretty nice. And another thing I noticed is that this works very good if price is kind of accumulating. So if it's under a 2 hour liquidity target, price is basically accumulating, right? It's accumulating and it's starting to trend. So that's for those who are into Metavex terminology, you basically, this is a stage 2. At the end, what I noticed of a swing high above an SMA, so basically these things where you have the indicator indicated, a stage 1 is happening on at least a lower time frame. So we never know
in a fractal way,
how the stage 1s and stage 2s are gonna play out. Itself. That's something we don't know, and I figure, I try to wrap my head around it. That's something we can control. So there are things in trading we can't control in my eyes, and that's something, but we know it is happening. Yeah. So I am expecting this low of this high, to be ran, because
that's it.
On average, every swing high in a bullish market is going to be ran at some point.
Yep.
And it's going to be ran more times. It is going to be ran more times than it is not, right?
Yes.
So we are going to be trading through highs more often than not. So these are stage 1s, and in stage 1s we are accumulating. So this is basically we are under a swing high, and we are accumulating. And in accumulations, price, basically institutions basically are doing what they say is they are stacking orders. So they are constantly buying, and then buying into the selling. So there's a lot of retail selling here, and they are buying into the selling. So they let retail sell, and then they buy at
right, because it's an exchange, right? It's foreign exchange. So when someone is selling, who is buying? Like if I sell you something, somebody has to buy something. If I buy something, somebody has to be selling something. So what institutions are doing are buying when retail is selling. That's who's buying it. And then when the price continues in that trend, guess what? More people are selling, and then more institutions are buying. That's how you get the continuations of trends. Yeah.
Places where they paused, right? And on high time frames, the same thing happens here. So that's why this works so well, I think, during accumulations. So this system is working very well during accumulation periods, which is under a...
I like that. because now you can apply it to the accumulation phase to get in from there. Because if you actually get in from the accumulation phase, you are literally at the beginning of what that phase is entirely. That's the literal beginning of that bullish move. And then obviously in continuation trades now is where the ICI, other words, with the Anno indicator would work absolutely perfectly. Because obviously during accumulation phases, which is what we're called consolidation or distribution phases, not distribution, but redistribution phasing, whereas consolidating but ready to go down, you have no idea what it's going to be doing in between that time. But if you already have your context, and then like you're applying like Anno's strategy here now with the Fibonacci at the 75 and 50, you can get into you can still trade accumulation and distribution phases, which is, bro, this is phenomenal, because you just never have to stop trading. You never have to stop trading. Look at this accumulation right here. This is happening here. See that swing low to that swing high? If you got in from that 50% right there, and that 50% hit there, and that 75% hit there, you would have been in this trade right here. Look at the other accumulation right here. Look at the other accumulation right here. The other accumulation right here. The one right here. The one in here. The one in here. It's endless once the context is correct. This is really nice stuff. Really nice stuff.
2 hour swing high. But what I noticed too is that these are very nice trends. So if often, so here not, but often if a swing high is traded through, you get very nice moves. Here not.
Absolutely. So like what I need to specify in my system now, being that we have this chart in front of us right now, what I want to see for me to get into the one that will run nicely is the one that stops, invalidates. Once that invalidation that is printed, and then we have that first break above again, and then that first triangle, that's the one I want to get in on. This one is the one I want to get in on. This one is the one I want to get in on, because these are the ones that invalidated, and after invalidation came the new reinitiation of the continuation of that price trend. You understand? So I'm expecting that behind here there was there's more bullish action that led to this coming down, and then it closed above, then to trade through that high, then to trade through that one. And I pretty much only want to take the first one, because after that first one and it starts to come up here, this one can immediately start chopping around, right? So the first one is always the safest one to get into. The first one is always the safest one, because here's the second one, chopped around and then lost. Here's the first one, but this one just lost, who cares? But then it invalidated, and what do we see? The first one took off. This is the second one right here. The second one is chopping around, creating a third, a fourth, you know what I mean? So you need that first one to be initiated. So if I just came on price and I just saw it like this, I would have immediately looked back and said, okay, this is where I would have wanted to be in. So where did I want to be in next? If this comes down just like this and just like this, if this comes down, invalidates it, as in closes below the MAs, and then comes back up, closes above the MAs, and if it prints that triangle, that's the first one. Like this one, this is the first one that I want to get to be a part of, that runs this high right here and continues going up. Simple as that. And that's the system. That's the best way to get into the highest probable continuation trades that I've seen so far.
This is at the top of a swing trend. But here, look at this. This is
yeah. Here, see, he went back a while ago, and I'm saying, see the bullish trend. This is the first one that created. Do you see how beautiful it is that I just explained it? Invalidated, came back down, which MentaFX would call a flush out, really and truly, a flush out, like a big pullback, right? But how we're looking at it is simplified, because if you literally just go to MentaFX's page right now and you just study what he's doing, it's a little bit jarring in a sense, because the MAs, what he's following is like the 10 and 20, and those cross over and stuff like that. So you're waiting on it to cross back over. And I never did like that, because now the MAs are playing a real mental game with me, and I never did like to, try to figure that out. So with me having my MA system like this, and then once that closes there and creates that first triangle, I could trade right through that one and then continue. You understand? And from that continuation, guess what? Based on your management, you would be in this entire trend right here going up. Think.
beautiful. And I wanted to be involved in
Beautiful.
this part of the trend as well.
Yeah.
So that was what I tried to test as well. So what I do, once it goes, and I expect a big move after that, which
Yeah. Nice.
sometimes happens, sometimes doesn't.
Mhm.
But if it happens, and look how beautiful this is on 50-minute as well, I will not
Mhm.
wait for, right? So I won't only trade in here. I want to trade this candle. I want to trade this candle, this candle, this candle, this candle, and
To
not
just
only in
continue.
the stage ones, but I want to trade in these stage twos as well.
Yeah.
And I trade it
Yeah.
until it gets invalidated, and then I look for a
Invalidated.
new 2-hour swing high, which we get here, and then do the accumulation thing again. So in here I would
Nice.
trade this way. In here I would trade just like Tef does,
Okay.
because now money has been accumulated and price
And
does the
being
choppy thing a lot less.
yeah.
Which
Look at all
anyways,
those trades in there.
right? So if we
Look
buy
at the
just
first
through
one.
the high, stop under
Thank
this,
you.
swing low.
Thank you. Thank you. He definitely understands the system. He understands the system to the point that he can modify it. Yes, that's what we're looking for. Yes. Great job. Excellent job. Excellent. Excellent. Chef's kiss. Excellent. Beautiful, my boy.
Here it does come back. Here
Boom.
it looks like it's coming back as well. But what I noticed primarily here is that price doesn't come back to the 75%. So the only time it does was...
So that's him now identifying that his new addition to the system works in the accumulation phase, because what that phase is supposed to do is trick you into thinking that it's going the opposite direction, but all it's doing is just accumulating to continue. So when you have an accumulation phase, like right in here, that's when you draw that low to that high and you wait for that 75, but then it crosses it. So what do? You can still use that same one, and then it comes back in here, invalidates it, so you don't really care. Now it comes back up, closes above, and from it even closes right here. You can start to look into here and to continue. So that's really cool to see. Both systems now partnering with each other for continuation trades, which would be like my strategy here with the triangles going up, continuation, and then his with the Fibonacci. So he just sparked something in my mind, and I'm going to go to the lab and create something really cool with that. Maybe bring back that 50 to 50 Fibonacci thing and just like start digging around again, but just layering what we already have being built already. So not confusing anything, but just making it super simple. Because let's just say I go in, I figure that out right now. What I can actually do with that is find a way to incorporate it into the simple system that we already have with the triangles and the MAs, to be something that shows where we would be expecting price to come back to. And once it gets back there, that's where you want to trigger that trade and then enter from there. That's it. Just as similar as I'm saying to enter through the highs when the triangle pops up, you know?
This one. Where we basically
So that would work.
already be invalidated, I think. But
Possibly.
this would be one, and that's the only one here.
That'll
So
work.
if you just trade the highs here, you're good, right? And what I noticed as well is that you can get the high, wait for a move lower, and just
CS
this. So
entry.
you could do that as well in these trending moments.
Yeah.
Right, so
Which is what MentaFX calls the CS entry. So if you see a swing high, and once that swing low is created, whichever candle crosses the next one, you can get into. So like this one here goes down. This one would be one that you get into. That fails, goes down. Once it doesn't invalidate, then the one that crosses this one, which is this, you can get into that one right there with a stop loss underneath that, which is risky, because guess what? See, like this one here, you have one that crosses, that's a loss right there. Two that crosses, that's a loss right there. And then this third one is the one that you got into, but guess what? It invalidated from your reach right here. So I guess you wouldn't be doing it from here. Very interesting. So actually you wouldn't actually be in here from there. So bam, comes down, and this is the one that crosses. If your stop was under here, you would have got stopped out right there. So that's boom, creates a swing high, comes down, and that's the one he's entering on right now. Cool, that makes sense. I like the CS entry on this. I like it. I'm telling you, back to the lab, yo. Yes. That's cool to
So
see.
just follow the lows, follow the highs lower,
Yeah.
and then just trade through them to stop on the low. So you would take a couple more losses probably. So here you would trade through it, stop on the low. So I don't know how this developed, but maybe this would tap first, then this, right?
And then that,
would
yes.
be stopped out.
Anno's a smart guy, man.
Another trade like that.
Very smart guy.
And that would be in, right?
Very smart guy. Here. That's how I see the markets too.
Nice example.
Yeah. This would have been one to take, and this one would have lost. But then look at this one that crossed right here. Once it crossed right here, then that's that. And that's a very powerful trade right there.
We buy stop the high. We buy stop the high. Here you would be in.
There you go.
That would be a loss.
Mm-hmm.
Then you follow it again. So you do maybe 2 setups per high.
Yeah.
So you have the high, this high, then this high. Put the stop on the low, and that would go.
Mine would be the one beside it, to the right of it. Yeah.
So that's also a way to minimize the moves coming back to break even, I found. And yeah, but you will make a couple more losses, but still. So I would do a 2 per high max, and maybe wait for a good pullback, right? Because otherwise, it might be at the top of a range. But that's still something I'm testing. So that's not really developed yet, but it's just an idea to get a smaller stop, better RR, and less chance of getting back to your entry price.
Yeah, that's what all of us are chasing.
That's basically what I'm looking for constantly.
Very nice.
So yeah, that's in general what I'm doing. So in the accumulations, I'm trading these. Well, this is what Mentifex called SSCs, which is basically simple the $3 method, right? $1, $2, and then the confirmation box. So for me, it's the swing highs here. Here's the swing low. My box is the 75%. I want price to come into the 75%. And then my confirmation is that it comes into 75%.
Okay.
Confirmation is that it comes out of the 75% and show me the willingness to go bullish.
Which is the literal same thing as this. Like if you just look on a higher time frame, this is what this is. This is that box that touches the highest right here, comes back down. But if it came back down to that 50 and then taps into his zone, which would be his zone down here, but Anno is not searching for a zone. He's just waiting on it to actually tap in there. And if it's going to continue, he gets in while it's going back up into that direction. So while it's coming back up is when he's just going to enter, right? And then put his stop below the low, because he likes the fact that he can get into those without having so many losses or price coming back into your zone, because he doesn't like the feeling or the anxiety of price just dancing around his area and then taking off. For me personally, it doesn't really matter for me because I already see that it'll do that. So if I know the tendencies already, I don't sweat it because I know what the tendencies and the characteristics of it is. So it doesn't trouble me to see drawdown, because I know what the potential of it and I know what it'll more than likely do, which is continue where I want it to go. Cool.
First market. And then trade it up. So it's the $3 method, SSC, structure, S&D, confirm.
That's what it is. Structure, S&D, confirm.
That's the idea, and it seems to work pretty well because usually if you look at the logic around it, it makes a swing high, comes back. So we're accumulating, and we are protecting the swing lows basically. So the institutions don't want swing lows to be ran
to go under there
because they are heavily involved here. So the swing lows are basically where price came just under a previous low.
Immediately, what I think about right here is, cool, once price gets into your 75, all you have to do, like what I used to do, is scale down to the lower time frame. And then from there is where you start to watch and then get into price, which is all we're doing really and truly. Because once price closes and continues and closes back above the MAs like this right here, once it closes back right here, once it even closes right here without even having the triangle printed, you can literally start to look for continuation trades right here once it closes above the MAs. And then you would have been in this, because if this was a daily time frame, you'd have been in this. And every candle that has the wick would have been your highs that you're trading through. You get it? So this works. It's just so many ways of looking at the exact same thing. And all we're trying to do is just help you to see it clearer. That's it. So this system that Anno just used with the Fibonacci, it's the exact same system as the SSC. It's the exact same system as what I'm showing, but the differences are you would enter on a very much lower range on these, because this is you trading on the micro but viewing from the macro, if you understand it. Because remember, this is his swing low, this is his swing high. So when he drops that Fibonacci here, as you can see, this is the 50, this is the 75. What he's doing is macro looking on the 1 minute time frame. But when he goes down in here and enters right in here, what he's essentially doing literally is entering on like the 5 second chart or the 1 second chart in here that is producing the same market structure as this overall thing, but on a very smaller time frame. But he's just using a system to identify where the likelihood of that entry would be without having to see the 1 second chart. Genius. That's pretty much all we're doing in essence. You know what I mean?
Grabbed some liquidity and went. And that is where they grabbed the last of the liquidity, moved up big time. So there are a lot of buy orders in here. And, well, yeah, the institutions don't want
price to go under there,
below there. So they're, well, loading out. They are letting the retailers sell so they can buy more positions into the selling. Right.
And somebody be like, oh, but that's on the 1 minute. Who's thinking about it like that? Yes, but listen, this exact same thing happens on every single time frame, on every single pair. So remember, this could be a 3-month chart. This will happen just like this that you're seeing. Price has the same behavior all the time. Accumulation, distribution, reaccumulation, redistribution. Nothing is outside of that. Stage 1, stage 2. It consolidation to move, consolidation to move. And that's all it is. So you'd be like, oh, but that's on the 1 minute, so that's not happening, blah, blah, blah. No, it's happening here because that's the market. That's the mechanics of the market. And we're back at square one. Market mechanics is the king of the entire market. If you understand how the mechanical machine works, you will understand where you want to be a part of the move. That's it.
And then at these points, they are mitigating their orders. So they don't want to let it come below this point. They want to mitigate it and move further up. So this would, for instance,
I was just gonna say, because look at this one candle right here. This right here that breaks this is a swing high. So he could have took that swing high and then put that 50 right there, and that 50 would have been there, and he could have entered right there. So again, using the macro to view the micro.
It's be a very nice trade. Beautiful. Doesn't come back to any point like you would have. Well,
if you entered on that one.
Not. Well, yeah, you would get tapped in, get back into drawdown big time, and then go right. And I don't like that. So I want to have this, and both systems are perfectly, beautifully fine. It's basically the same system, but the entry is lower on the.
As I just said,
after the swing high. So that was basically my half hour. This will be the video. I hope you enjoy. If there's any questions about this, I'm happy to answer them, and perhaps make another video if needed. Okay.
This was beautiful, Anno. Like perfect, perfection. Even just to reiterate now and look on my charts, like he's saying, simply put, it doesn't matter what time frame we look on right here right now. I'll do it on all. Let me just make sure we're still recording. Yeah. So check this. Remember now, this is on the daily. I'll find the instances in all of them. Here it is, like right here. And here it is, like on the 1 minute. Just right. It's everywhere, but I want to find the cleanest one to show you. So you can see it. God damn. Of course, the 1 minute will have a whole lot more movement to it, right? Yeah. Cool. Cheese and peace. Yeah, sure, perfect. Let's just use this area right here, and then on the 15, we can just for time's sake, let me just use this area right here. Cool. So during the time that we saw this, right, we close above, I was interested in looking for any trade on my lower time frame. Of course, you can use this and say, all right, let me look on the weekly and on the monthly to see if this context makes sense. And on gold, it does make sense because look at what we're doing entirely. So this is just that swing high coming down to that swing low and then coming up to do that same thing. Now, sure, granted, you do have a loss right here because you got in right here when it crossed that high and then it came down lower. So now you really don't care because it started to print, it invalidated. But this is the validation point of the continuation of that trend, which we've been on gold for the longest, and this is the daily chart. So even if you decided now that you're just going to take those and those and those, I noticed that you end up with, see, this one you'd have taken a loss, but still valid because we haven't closed below. So now you'd have taken this one. I noticed that you can increase your win percent if you literally just do something like this. Only trade one time frame. So I'm now about to blow your mind. If you only literally trade one time frame, here's what would work for you. You might, yes, you might be bouncing around the place a bit, but let's just say you got into this choppy area. I'll use a harder area for you to see so that you can kind of get the understanding. You see price coming back down, you immediately can tell you're like bearish, but let's just say on a 1 minute and you only wanted to trade the 1 minute. These are your opportunities right here. You see where price invalidates, you waiting on the validation. Nothing validates. Still, and then this validation came right here. You get no trades. This one is the only one that came right here. And let's say you got into that. Let's make it real. Like if you only wanted to trade one time frame, could you? You know? And that would have been your trade right there. At 1 to 2, you're going to break even. So you'd have taken a loss right there. Or with my new system now, I'm saying 1 to 1 is when I want to go break even. So we would have been 1 to 1 right here. So that would have been a break even trade. Because I want to take less losses now, just like Anno, just a while ago. I want to take less losses now. So what I'm doing is at 1 to 1, I'm going break even. Price comes up, you don't care about it because it invalidates. Now that it validates right here, you're waiting on it to trade past the low. Does it trade past the low right here? Very barely. Cool. So let's just say you actually did. You took a loss right here. Cool. Let's just say you took a loss right there. That's one loss. Boom. Now that's one loss. So now you've taken one loss. This one doesn't work. This one comes down. And then you take another loss right here. Because that's the thing, that point. Boom. You take a loss right there. Then this one comes down. This one doesn't invalidate. I mean, this one doesn't validate. This one doesn't validate. Nothing. Then this is the one that you get into next. So you took two losses. This is how you back test too. Like very simply too. So 1 to 1, I'm already break even. 1 to 2, I take 50% partial. So I already took one back right here. So now we just lost one and made one. Right. Now continuing. This one comes down. This one is a straight loss. And this is happening over like minutes, and you know what I mean. So you're not traumatizing yourself, because remember, this could be on the hourly, 2 hour, whatever the case is. I'm just trying to show you like how you could literally take 1 minute, a 1 minute time frame, and make this thing work for you. So that would have been one loss. So now you're back at 2 losses for the day. Boom. This one comes in. This one validates. Boom. Your stop loss is right there. Now at a 1-to-1, your break even comes back out. So this is a break even trade. Validates again, but doesn't pass through. So now invalidates, comes back down. This is another one. This is your loss. This is another loss. So now you'd be 3 losses deep. This is why risk management is important. So you'd be 3 losses deep. All right, cool. Nothing invalidates. Nothing validates because these are all invalidations. Then this right here is your king trade for the day. Bam. And all of a sudden, because remember, we didn't even use any higher time frame context. We just looked on this and said, okay, we see that we clearly bearish. So let's just stick that bearish bias. Because you can just zoom out and look at what price is doing. We see, okay, price is bullish. So even if we got into here, we already see that price is bullish. So just continue with the bullish side. We see price coming down bearish from 7 o'clock in the morning. 8, 9 o'clock, as you can see down here. 7 o'clock is bearish. 8, 9 o'clock, you're still seeing bearish plays. Just take them. So now we are already 3 trades deep, lost. And then this is the one that you go break even at 1-to-1. At 1. So this probably would have been a break even right here, literally right there, which is crazy. But you got that break even. So let's just, we're doing it fair, So that's a break even. And then this would be your second trade that you got into because it validates. Or even this one right here because this qualifies because this is a triangle. So that one right there. And then this right here. At 1-to-1 you go break even. So that's where you go break even. And look at this trade, guys. Look at this. You see what that is. And if you want, you can say, all right, you only take partials off when it goes to, or crosses over here. So you'd have taken your partial off at 1-to-4. You've already covered all of your losses. So what Anno is saying is that nothing is wrong with the losing. What I'm saying is nothing is wrong with the losing. What we are trying to do is literally minimize the losses. Now my Fibonacci is set up like this, where I have, say that's the high. Oh, sorry. That's the swing high. This is the swing low. That's how I have my Fibonacci. So this one wouldn't have validated. Let's take it to the other one. Swing high, swing low. Oh, no. Let me actually use it within the context. So that swing high, swing low, swing high, swing low. Doesn't come back within that zone. So bam, swing high, swing low. So swing high, swing low would have started right here for me. This is how I would look at the Fibonacci. That, which it doesn't even top there for me. And the ones that I'm using now, well, I'm not using it now, but the ones I was using is the 0.618, which is the golden ratio, right? And then 1, simple. And then this would be like where I take my profits. So generally how I used to do it now, or like even just a couple months ago, that's how I was putting my stop. This is that. So I know roughly this is always roughly around a 3 point something. You know what I mean? I just knew that no matter what. So if I always just, even if I, sorry, my bad. If I use my Fibonacci and I just did this, I know no matter what, and this is like the bigger time frame to go take the profits, which would be down here somewhere. Where is that? Oh, this is where I'd go break even, sorry. The lighter one is where I go break even. And then this is the one that I take the profits. So it's always going to be a 3 something, So that's how I was looking at this thing. So if I wanted to be like a 1-to-3 trader, this is how I'd look on my Fibonacci, and simple as that. That's just how I would trade, and this occurs a lot, but this was for the old system, This is how I used to think about this. So see, this is a swing high, this is a swing low, and then I wait for it to come back into my zone. Swing high, swing low, comes back into my zone. I enter once it tops, or once it goes around and comes back through. So whichever one your choice, and then that is my stop, and then there's my 1-to-3 again, So many ways to look at the same thing, and then it does go, because that's a higher time frame move, right? This again right here. Let's see, swing high, swing low. Here it is, swing high, swing low, swing high, swing low, swing high, swing low, and then overall, once I see it breaking down, I can grab the lowest one from here if I wanted to, this one, and look on that. That didn't touch. And then I can also look on this one right here that went down, or this one right here. Any one of these really. But you could have went from here and said swing high, bam, didn't even touch. So probably not, because this is the one that broke out of this consolidation zone. So maybe you took from the lowest zone and it went up, and that didn't work. Now you said, all right, cool. Once it breaks this, you continue. You just never do get that Fibonacci one from right there, But that's just one way you can be looking at it. I prefer to have that understanding that, I'll be in drawdown maybe for a little bit, and then price will continue. But this here at least proves that you can stay on one time frame literally and just did this. Like if you said to yourself, boy, you know what, no matter what, I'm just going to follow one time frame, whether buy or sell, you're going to take a hell ton of losses, but you're bound to get into something that moves. You understand? Like if you bought right here, you'd be into that buy right there. If you sold right here, you'd be into this sell right here. So it's all subjective, but I do appreciate you watching the length of this video. This is really crazy. And let me show you what he's talking about when it comes to but this is jam packed with a lot of value here with my thing of, let me come off of the hour of analyzing a market real quick. This is how you can analyze a market really quick. You're literally looking for the triangles. So bullish, I'm bullish. Get down to the weekly, I'm bullish. I'm bullish. 2 hour, I'm bearish right now. So I know that I'm waiting on the bearish to become bullish. That's it. But if my time frames are 2 hour 15 1 minute, then right now I'm bearish. 15 minute, I'm bearish. Cool. 1 minute, I'm bullish. So what am I waiting on the 1 minute? For this to become bearish, give me a triangle, and once it gives me a triangle, I'm ready to sell that down into here. That's as simple as that is. But again, I have my daily as my godhead, which I use to direct where I want my 2 hour to be first. So once I saw this down here, like you'll see in my older videos, once I saw the daily close down here, I was bullish from here. And I told the guys, I said, this is our liquidity target top that we want to see price get run on. And look at where price is right now. So it's not hard to see, it's not hard to do. But obviously at that time, I didn't even have my indicator created yet. We were literally just trading based on liquidity target tops. Literally. This is how we were trading. And we were just making it work throughout the whole time, because this is the same system. Nothing has changed. The only thing that has changed is the simplification of it, because now we have an indicator that can tell us, versus you having to draw this out all the time. Because just as I drew that in that liquidity target top, guess what's up here? Another triangle. And that does not change. So this shows you that since price has left here for such a long time, this is still a liquidity target top, because the context says we're bullish. Look at this, liquidity target top. These dollar signs are liquidity target tops that have been taken. You understand? Very simple. So we have been drawing this before the indicator existed. Before that existed, this is what we were doing. I knew that this was a liquidity target top, this one, and then this one. And once price came back in here, I knew this was a liquidity target top, which you could have taken, but it failed. But then, I was using this. This is all I was using. So I knew that once it closed up here, this is what I was doing. Yeah. And so I knew once it closed here, this is what I was looking for. Liquidity target top, liquidity target top, target top, target top, target top, target top, target top. And see up here, we're doing the same thing. People are trying to sell into here. These are all bullish candles, and we're still above the MAs. So why would anybody be looking to sell right now? Now the 2 hour is saying that we're selling, but that does not mean anything, because it's just the same as when this was saying we were selling and this one was saying we were selling. But look at where price ended up. And I think that's a lot for this video right here. I'm going to end it right now. But a lot of value. And Anno, thank you very much for that extensive video. Sorry that you had to do it twice, but at least it got you solidified in your explanation of the video and the system and the process and how you were approaching everything. I really do appreciate everything. And guys, if you're watching this, the system is not hard to understand. It's very simple. What we did was make it even easier for you. to understand based on the indicator right now. So you can get into these trades, you can get active, you can find ways to become profitable through the system, through the simplification of the system itself. So, you know, like if you were selling here, look at this. These are opportunities that otherwise you would never be able to understand and see, because you'd be trying to buy back into these because of what, like some weird other system like support and resistance, like thinking about something like this, like to say, oh, this is what they say. Oh, this is the price that pushed all the way up here. So there's a lot of support right here. Really? No. Oh, really? And then this is where it broke through and then tested and came back down. So now there's a lot of resistance. Really? No. Oh, since it broke through there now, so there's a whole lot of support here. Here's the first proof, because see price touched right there and then came back. Really? No. Is that so? Well, tell me why it didn't respect anything over here. Tell me why it didn't respect anything right here. Tell me why, if I draw even this support area or resistance area, because whichever one of them you choose is rubbish, why isn't price respecting anything? Because it's garbage, bro. It's garbage, guys. Don't fall for the tricks. Don't fall for the foolishness. You know what I mean? Market mechanics is the way, and how we're showing you is the best way possible to get into longer trends and to get into trends. Simply put. And then when it closes right here is probably when you took your partial and you were chilling at a 1 to 7.75 with partials. Anyways, guys, peace.